everyone. Welcome back to Equity Masters Stock Market Wrap-Up. I am Rini Mehta. Corporate governance issues with certain companies, uncertainty surrounding national elections, and global issues like trade wars have taken a toll on the Indian stock markets. Market participants are in a foul mood for sure. A bad day in the stock market can get stretched out for months or even years. Best thing to do in such times is taking informed decisions. And I am here to update you with all that matters to you and your wealth creation. First, let's look at the key topics that were in focus this week. US President Donald Trump's tariff war threats, cues from RBI and Fed minutes, rise in promoter pledging and its effects, 12 PSU banks get Rupees 48,000 crore government fund infusion, and we have lots more. Stay with us. First, a quick glance at how the broader markets looked like. Reversing a 9-session falling streak, the Sensex rebounded 400 points on Wednesday. Post that, Indian share markets traded in a narrow range mostly. Rupee became Asia's worst currency as rising crude prices and tensions over Kashmir weighed on sentiments. Global stock markets were mixed as US and Chinese officials entered 2 days of negotiations aimed at ending a tariff battle. Meanwhile, Donald Trump threatened on Wednesday to impose tariffs on European auto parts if he is unable to strike a trade deal with the EU. Trump's renewed threat against the EU auto industry takes on a new edge as it came 2 days after the Commerce Department delivered a report that said sources found European car imports constitute a national security threat to the US. In another development, according to the Fed's minutes released on Wednesday, the US Federal Reserve signaled they will soon lay out a plan to stop letting go of $4 trillion in bonds and other assets. But policymakers are still debating how long their newly adopted patient stance on the US rates policy will last. Back home, even the RBI released the minutes of the Monetary Policy Committee's meeting held on February 6th and 7th. The majority of MPC members see the trend in inflation as benign and the growth momentum softening, which opens the room for rate action to support growth. Now moving on, I have been researching on promoter pledging lately. It turns out lot of companies' promoters have pledged more than 90% of their holdings. Now share pledging means taking a loan against the shares that promoter holds. Promoter pledging can turn out to be a major investment risk. Investors would do well to check this before considering any stock for investment. CG Power and Industrial, Quality, IRNFS Transportation Networks, and Sterlite Technologies are some of the companies from the BSE 500X whose promoters have pledged over 95% of their holdings in the December quarter of financial year 2019. Even shares of the Z Group have plunged between 15 to 60%, while Reliance Group stocks have dipped 60 to 80% on such incidents. Well, you guys can read my entire article on Equity Masters website for more insights on this. Now from the banking space, the Finance Ministry on Wednesday announced a 48,239 crore capital infusion in 12 public sector banks to help meet regulatory capital requirements and make growth capital available for the stronger lenders. The biggest beneficiaries of the latest round of capital support were the best performing Corporation Bank and Allahabad Bank. With this tranche, the government has now infused 1,958 crore of the 1.1 trillion rupees bank capitalization program this financial year. As per ratings agency Moody's, the capital infusion will improve their solvency and boost their bad loan provisioning, but will not address the large volume of legacy loan problems which are yet to be resolved. A key hindrance to a faster turnaround is slow progress in the resolution of legacy non-performance loans and the need to build up provisions against those assets. Speaking of recapitalization of PSBs, we at Equity Master believe using recapitalization bonds can only act as a short-term measure to the crisis afflicting Indian public sector banks today. Such a measure will not address the structural issue in the banking system, that is the poor standard of lending and poor governance system. Our big picture editor, Vivek Kaul, talks about moral hazard risk arising out of recapitalization. He writes, and I quote, "If the government bails them the banks know that they can count on the government bailing them out the next time around as well. And this means that they can follow fairly loose standards of lending in order to lend money quickly." Unquote. Now, how this pans out going forward will be the key thing to watch out for. Meanwhile, we will keep you updated from this segment. Moving on, mutual fund investors who have been resilient in their investments till now are showing the first signs of panic. Net mutual fund inflows for January 2019 was at 61.6 billion rupees. This is a 60% drop from the net inflows of 153.9 billion in January 2018 of last year. So are we seeing the first signs of panic in the Indian stock market? It is important, dear listener, to avoid the herd in times like these. As Tanushree Banerjee, co-head of research at Equity Masters, says, and I quote, "These are the times that differentiate the small number of investors who create long-term wealth for themselves by taking long-term positions in safe stocks. You should also hold on to safe stocks you already own and avoid panic selling. This will go a long way in your wealth building journey." Unquote. Dear listeners, you can receive Tanushree's safe stock recommendations by logging into stockselect.in. Well, on this note, I will stop here. Before I sign off, I would like to know whether you like our podcast. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.